Welcome to the SDA Housing Podcast, brought to you by NDIS Property Australia. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hello everybody, my name is Minh and I'm your co-host today with Rob from NDIS Property Australia, and you're listening to the SDA Housing Podcast, a show that explains, highlights, guides and brings awareness about all things SDA in this ever-changing NDIS world. Today's exciting guest speaker is Jon from Access Living in Melbourne. Welcome, Jon.
Hi there. Thanks for having me, guys.
Yeah, welcome, Jon and Minh. Good to be here, and been looking forward to this discussion.
Jon, tell us more about who you are and what Access Living is all about.
Absolutely. And again, thanks for the invite onto the podcast, guys. Very exciting space. Access Living Group, I guess, is a design and consultancy firm really focused on bettering the NDIS outcomes throughout Australia, really focused on South Australia, Victoria and Tasmania at this stage. We're probably working on about 200 homes at the moment across those areas, both house and land and apartments. And I guess our biggest focus is making sure that we build compliant homes that really meet the needs of the NDIS community.
Great. How long have you guys been operating for now?
Absolutely. We've been operating for about 3.5 years, give or take, but we've been builders and designers for the last 15 years. So as much as the NDIS is a newer space for us in that sort of three-year term, building and design has always been in our blood. So Michael, one of our partners, has been an architect and a partner of building companies for about 15 years now. So it's definitely something we've been doing for a long time.
Understood. So just to clarify, Access Living is not a building company itself. It's more of a consultancy aggregation service working with various other builders and providers. Is that correct?
Yeah, that's right. I mean, we are builders ourselves as well, but we basically partnered up with 3 different building companies that we're very heavily involved in from a partnership perspective. But Access Living Group, to really keep it concise and really focused on NDIS, we decided to really keep it as a consultancy business that then designs and sort of coordinates the whole process from start to finish. So we design the home, we then work with the compliance team, manage the construction all the way through with our building partners, and then we work on the placements with SDA at the end as well.
Gotcha. Rob, do you want to ask Jon more about the vetting process and what they go through with regards to consulting with these other builders? Rob?
Yeah, Jon, yourself and Kerry have mentioned in the past that you do all the due diligence on the builders, and obviously it's pretty topical at the minute with whether builders are viable and financially secure. So you go through all of that, don't you, in selecting builders? Yep.
Yeah, absolutely. Flavour of the month, that question. It's probably something that's come up a lot in the last 6 months with quite a few of the less sophisticated operators sort of going under. We do a pretty heavy due diligence process and we're very heavily involved with our building partners. So unlike building a one-off home where you really don't get any sort of concise or clear answers, we work very closely with our builders, and we do between 50 and 100 builds with each of them per year. So we really are partners and privy to a lot of their internal information, which is great. And we do due diligence checks all the way through for cash flow analysis, making sure that trades are being paid on time, and obviously doing credit checks as well. So we do a lot of sort of DD all the way through, due to the fact that we just have so much building work undertaken with each of them at every month bracket.
Okay, great.
I guess so far so good as well. So all of our partners are in the green, which is great. Very stable financial positions. We wouldn't be working with them otherwise. And I think we did our last check about 2.5 weeks ago, and all 3 of our partners there are looking really good.
Excellent. Now, you also mentioned when we caught up the other week, which I found interesting, is that you're actively involved with the builders in selecting fittings and fixtures. It's basically your designs that these builders are building, which you've worked out in conjunction with your partners in in the care sector. Is that correct?
Yeah, that's right. Yeah, what we found is that our building partners are very good at building high quality homes, but these are a very specific product. And we worked very closely with a lot of SIL and SDA provider groups over the last probably 3.5 years, like I said, and we do a lot of residual work with them. And we design these homes with those parties involved really heavily. So these weren't built to a cost, they were built to a need. And that the best thing about that is we've ended up with a design outcome which is far superior than a lot of product that's on the market, and really built for the actual community that needs these homes first and foremost. And that's what we love about our product. So it is our product. It is a design that's been, I guess, that the builders are involved with us on those, but we do the designs themselves. That's right, and we're involved very heavily with choosing the fixtures and fittings to make sure that we have a concise product that really stamps the Access brand.
Okay, and you able to give us a quick time frame as to how long from start to finish these projects are taking to do the house and land packages in each particular state, Victoria, Tasmania, and South Australia?
Yeah, absolutely. Yeah, it varies a little bit, but I guess in Victoria at the moment, from when a site is ready, and we tend to work on obviously titled blocks of land, so we'll just base this on a titled block ready to build on opportunity. But generally, it takes us about 4 to 6 weeks to get to site from when building contracts are signed and the whole bit. And then we've got a 5-month average build time in Victoria, which is extremely quick in today's market. It's a very quick build. Most companies are sort of averaging that 8 to 9 months and even 12 months at the moment. And I guess that's due to just the volume of homes that we are building with our partners, which is great. And in Tasmania, we're averaging about a 6.5 to 7 month build time. And in South Australia, we're averaging a 7-month build time currently. So all within realm of being quite quick builds, but also not compromising on the quality aspect of each home.
Okay, great. Yeah, that is quicker than most other builders around the country.
At the moment, it is, yeah.
Now, the other question we obviously get, and what investors are mainly concerned about, is they're nervous about whether they're going to be able to rent out these homes to the participants. Can you just go into the fact, one of the main advantages of why we're partnering with you is you have the relationships in place in different areas and give us an idea of where we should be directing investors to build. And you then have different providers that you're dealing with who may then be able to provide the tenants. Is that correct?
Yeah, absolutely. I mean, with any investment, there's always a risk factor, and I think investors are very open to understanding the risks of investing. So we always recommend that they get independent sort of evaluations on this, and not just take our advice. But so far, so good with everything that we're doing. So I guess because we design these homes with the SDA and SIL groups in mind, we've already got them on board, and they already champion our product on a daily basis, which is just a fantastic spot to be in. Currently with our homes, we have a 95% tenancy on everything that we've completed to date, which is extremely high in the NDIS markets. We don't have empty homes, which is great. Everything that's finished is getting multiple offers from multiple providers at the moment, which is a really good spot to be in. And we're seeing that demand go up, not down currently. So naturally, there are risks with investing, and we always understand that tenancy is something that everyone needs to support their asset. At the moment, like I said, we can only base it on the research that we've got and the placements that we're doing, but the demand's growing and we don't have enough homes to fill. So it's a great spot to be in currently, and we evaluate that on an ongoing basis. So we work with our providers to choose the right locations that they love and endorse, and then we do packages within that area.
Sounds good. Now, in terms of the homes, we tell our investors that only expect 2 tenants, even if it's a 4-bedroom home. You share that philosophy as well, correct?
Yeah, absolutely. I think it's always that under promise and over deliver mentality. So these homes are built, you're right, the 4 bedrooms are built to a point where they can I guess from a compliance perspective, hold 3 people. We always sort of suggest that the investment is based on 2. In the event that you do get 3, fantastic, and we do have homes that do have 3. But it's always good to base it on the more normal scenario, which is 2 tenants, and that way you don't lose out on reputation and/or financial risk if you're basing your numbers on that.
Right, and one other question that we're getting is just to give investors an idea of time frame. Once the house is finished and handed over, have you got stats on how long before you're likely to get 1 or 2 tenants in that home? Is it pretty much straight away, or do investors need to allow a month or 2 to get those tenants in?
They do need to allow a bit of time. You're absolutely right. They do need to allow some time. I guess the main thing is that the home, and this is one thing a lot of people don't realise, you can't actually register the home in the NDIS system until it's handed over. So you can't really get people in that first month no matter what you do. So even if there's a participant ready, they can't technically register onto that home until it hits the 28-day mark past registration of that dwelling. So there's always a 1-month gap there. Every now and again, we get one in earlier, and then they sort of backtrack it a little bit, and they sort of back pay, which is a possible scenario. But generally speaking, and like any home, people want to walk through it, get a feel for the area, and we find that most traction that we get with our SDA groups is when the home is actually completed, and they pick up the keys and they walk groups through, and the participants see exactly firsthand where their bedroom is, what their front yard looks like, and they fall in love with it then and there on the spot. So we see a lot of our activity, even though we start that process prior to handover. We see most of that activity happening, obviously, once the home is finished and on the ground there. So I usually say, it's worth allowing a bit of time after construction to get the right tenants in. Once the right tenants in, they generally stay there for a longer period of time. It's not a transient investment like a normal retail sort of home or lot.
Okay, John, that's good to know. Min, have you got any questions?
John, quick question. When should our investors who's building with Access Living Group be talking to one of the providers you mentioned to get ready for procurement and transitioning in?
Yeah, absolutely. Look, realistically, that the home is up to them to look after. We're there to assist wherever possible. We aren't responsible necessarily for the placements, but we do have a placement team that really heavily assist there. The short answer is an investor can work as far out as they like with an SDA group. We have an SDA group that will jump on board with that home straight away. But that being said, we also don't want to lock anybody in. We like being fair and concise, and we try and spread the love. That way it gets the best outcome for the client as well. So generally speaking, we'll start talking to a group, or our placement team will start talking with a group about 3 months out from construction completion. It generally takes them a little bit of time to then get some traction on that one, mainly because it is still 3 months from being finished, and these guys tend to work pretty quickly. So a client's sort of ready to go now, or they're ready to go in a year's time. There's not really a lot of people that are ready to go sort of 3 months out. So we start the conversations, we let them know what we have coming up. They then start walkthroughs around about 4 weeks from construction completion. Landscaping's not done at that point, but the home is generally finished. And then we start seeing some pretty heavy traction around that point. So about a month out is when we start getting some pretty clear ideas of where the home's at as far as tenancy.
Most of the providers around Australia normally want about a year to start working on participant procurement. I guess the difference to what you guys do is you guys are putting together packages that have high volume of demand from participants in the area. So that way, I guess that's why you're a little bit different in that you can handle the engagement with providers 3 months out rather than a year out.
Yeah, that's right. We work both ways. Yeah, we work both ways, and you're absolutely right. When we meet with several clients that are sort of wanting a very purpose-built home, and I guess that limits the risk factor for the investor. So we'll work with them very early, like you said, almost a year out. A lot of the time, the classifications of those investors change through that journey as well. So it's important to know that the home needs to potentially migrate through a journey of a participant. As an example, we worked with somebody a year ago that was an accessible living category, an IL category. independent living, and then they obviously got reclassified just recently as a high physical. So the whole zoning of that home changed, which means they couldn't move into it because it wasn't purpose built. So what we try and do is not work too far out, because classifications change and the NDIS is a very moving target, but it does happen. And you're absolutely right. What we do is we try and build homes that meet the general classification to allow for maximum tenancy, and also meeting the needs of those participants on a major level, and then retrofitting can happen after that.
That's great. One of our first deals with your company was the 2 beverage packages in beverage. Now, I was quite surprised. We were quite surprised how fast the builders just going through the whole process. We're already at frame and trusses already in place after a month and a half, I guess, and it's just we were quite surprised with it, and you know. Is this common to see a 5-month-ish average on your builders?
That's right. Yeah. At the moment, in Victoria, we do. Yeah, we've got our building partner, builds, a couple of hundred homes a year. So we're not a small operator when it comes to that. And I guess we've just got the right trades, the right schedules, and the right materials ready to go. So that process is a quick one. And but also a high quality one as well. We actually have a dedicated NDIS building team, so they're not a standard crew. We have a very dedicated crew within our builders that just do our NDIS properties, and the benefit to that is they know exactly what they're building and how they're building it. So we don't run into the same little hiccups that come up if you're just building a one-off. These are proven homes that have been designed by a builder themselves, an architect-builder, and the benefit of that is they understand construction as well as architecture as well. And then the team on the ground through our building teams just do a great job and just pump through them.
I think it's very important for our listeners to understand, and I think both of you will agree with me here, and that it's just because a person may know of a builder who seems to be a quality builder, that's not good enough. You got to have the experience and the know-how behind you. And even still, I mean, you guys are living proof. You got to have your own layer of internal mechanisms of vetting them and managing them and seeing their books and having your own designers and architects in your own office away from the builder. So having that extra layer of experience from you guys over and above the builder itself with a specialized building crew in their organization to do NDIS, that just speaks to me all about efficiency and expertise. You agree?
Completely, yeah. It's and that's part of the reason why we started this journey is we saw some of the products that were out on the ground through other builders, and I won't sort of talk about who they are because I just don't think that's fair or reasonable. But it's a very, very detailed build, and it's all well and good to say that you can build an NDIS home and anyone can sort of do that, but making that home compliant, making that home desirable, and then making that home, robust enough to handle the category is a major undertaking, and it's taken thousands of hours of time between us and our partners to get there. We've done multiple revisions on early day homes as well. So we're probably on version 7 of one design because we constantly improve the efficiencies of each home and work with our groups to provide the best possible ones. And I guess it's quick to note that in Victoria, obviously every certification and the checks at the end are done by someone independent, which is fantastic to make sure that it's been done properly. Our team that we work with on that, we're dumbfounded that we've passed every single inspection on one of our homes first go. So they normally have builders that don't know what they're doing come back to them, and they're doing all these changes and revisions after construction when the home's meant to be finished because they don't comply with the code, where we've met every single inspection and passed on the day without any form of revision whatsoever. And that just speaks to, the quality that we're doing and really taking into account every aspect.
That's great work, Jon. I mean, your team should be applauded for the tremendous work you're doing and the volume of work you're doing as well.
Thank you. Yeah. And I guess first and foremost, we love the fact that it's got a major community benefit, and it's obviously a program that we're very proud of, and we love seeing the end participant getting maximum pleasure out of being in one of our dwellings.
Yep. Now, I was in Canberra about 2 weeks ago, and while I was there, I was talking to a client who bought one of our apartments in Western Australia for SDA, but he happened to buy another house from another builder locally in Tarnee. And Rob and I were talking about the Melbourne market, how there's all these builders who are just building it just not properly and too cheap and oversupply in areas. And one of the things that Rob and I were quite astounded was when we were in your office 3-4 weeks ago, you said that you can log on, you as a business, first of all, you're a provider. You're registered as a provider, which is great, but you're not actively as a provider. But you have access to the portal to see the pipeline of constructions enrolled in the system and their provider numbers. I mean, please tell us more about that kind of tool that you guys have access to that allows you to build your business pipeline there by seeing the competitors who are providers and builders in the system as well.
Yeah, absolutely. Well, I guess we can, do our best to try and navigate the builds that are coming onto the market. And I guess we don't want to just be building homes that are empty and not tenanted, but also we don't want to be building homes in the wrong spot for the participants first and foremost. So, these homes are obviously there for their needs first and foremost, and we want to make sure we're building in locations that they truly desire and truly meet purpose for them as a family and as a team. So we work very closely with our SDA groups and work through locations and where demand currently is. Naturally, those metrics change, and I wouldn't say that we ever have, 100% clear data, but we have a good understanding of it. We always recommend that somebody get independent research done, of course, like any investment, and do their own research. But I guess what we do is we try and work very closely within our systems to try and navigate as best as we can the locations and the demand metrics for this.
Right, John.
We keep on talking. We keep on talking about research and whatnot. And Rob, you and I spoke about this originally. It's often very hard for mum and dad investors to navigate this complex SDA market because they don't have visibility of who's building what and where.
No, and because of the lag time, they might think that there's no SDA homes in a particular area, but behind the scenes there could be 10 or 20 in the process of about to being built, which of course will finish usually before whatever they build will. So there's that worry.
Exactly.
But John, are you able to give us, in speaking with all the providers and the sills and your understanding of the market, just any trends or where you think this is heading in terms of the type of participants, the demand? Everything we hear is that there's going to be enormous demand going forward and we won't have issues with supply. But what's your take on all of that in being actively involved in the industry?
Yeah, at the moment we're seeing strong upwards metrics. I guess there's always room at the moment for more registrations coming onto the market, and we're seeing a lot more people get registered within the NDIS community as well. So there's always new onboarding happening with participants. We're seeing an upward trend at the moment in our current sales, and based on our current demand of properties, we're seeing a big flood of SDA providers that want to take on our homes, which is great. Again, and I guess this is just like any investment. We always, get people to try and do as much research as they can before they jump on board with any form of investment. We're not investment, specialists per se. We're NDIS specialists. So when it comes to tenancy and that type of thing, we're seeing strong trends, but we always recommend that somebody gain independent evaluations on the risk of any investment that they take on.
John, robust, hybrid, HBS, what's your feedback on your rollout of product in the next few months or year, particularly on the robust topic and the areas there?
If you look at the categories that are strongest at the moment, and these are pretty strong metrics from any form of research site, but robust is probably the highest category as far as demand in the area. We've seen strong growth and demand for the robust category. I think it's a safer. Everything's high risk, of course, but it's a safer investment for anybody compared to other categories that might be a little bit not flooded by any means because we're not there, but the strongest metrics are coming from that category, that's for sure. So we're seeing strong demand for it. We're probably seeing 6 times more people apply for that type of funding compared to anyone else. So as much as we're not involved in the funding ourselves, we're seeing who the funding applications are coming through with our provider feedback.
Have you started rolling out any of the hybrid designs that you guys have been talking about for months now?
Yeah, we have. Yeah, so we're building our hybrids at the moment. I guess the hybrid design is good because it does cover off 2 categories. Naturally, you can't mix. So generally, you'd either have HBS or you'd have IL or you'll have robust. You don't tend to mix them up, but what it does is it allows you a multiple classification to then make some very small changes to allow either role. So as an example, they've got movable bench tops in both of them. That's not required in robust as an example, but it still allows for an HPS to move in there instead of a robust potentially.
And that to let listeners know, we don't come across many other builders doing a hybrid design. In fact, I think Min, would I be right in saying that Access Living are the only one rolling out a hybrid design at the minute? Or
yeah, I think our builders at the moment are the only ones doing it. Yeah.
If you look at the supply pipeline, there's like a handful of 1 or 2 or 3 in Queensland and Perth, and that's it. There's not many. No.
Yeah, we're not seeing many. So, and we just think it's more so it actually creates a more fluent product that allows to meet the expectation of more participants. That may or may not be wanting to come into that area. So, it meets a robust and it meets an HPS category, and it means that we open up to allow one or the other into that home. It just creates a different product.
Jon, is there much of a expense to go from HPS to the HPS robust hybrid?
Not as much as you'd think. No, there's a little difference, but it's not a crazy amount. And I think to allow the multiple category potential, it's definitely something that's worth considering as somebody purchasing one of these homes, because it opens up to 2 different categories.
Do you mind giving a rough estimate, round number of the cost increase?
It really changes quite dramatically based on the block itself. So naturally, robust and HPS categories have very different land requirements. So it can make a difference there. It can be as low as 5 to 10,000 as a difference, and it can be up to 50,000 as a difference on a really, really sort of steep block as an example. But generally speaking, we're sort of seeing the lower end of that category at the moment as far as cost.
So, Rob, would you agree that if for an extra 30 or 40 grand extra increase, you might as well go the hybrid because it gives you so much more flexibility?
Yeah, certainly, and it obviously reduces the risk of tenancy vacancy down the track. And what might be in the house now, you might have 2 HBS in the house now. In 5 years' time, if for some reason the tenants had to move, you could put in 2 robust. So I guess you've got plenty of flexibility there.
The flexibility is the key on that one. Absolutely.
Jon, when you talk to your providers out there about the robust category, are they all saying to you, we only take 1 robust participant per house, or are they saying maybe 2, definitely 1, maybe 2? Well, what's the impression that you're getting from the providers out there on the robust topic?
It really depends on the placement of the bedrooms, and I think the design in that one is key. We're seeing 2 in a lot of them at the moment as far as design is concerned, and I guess we've got some very purpose-built, robust designs that allow for separate courtyards and their own laundries, bathrooms, breakout areas, etc. And because of that, I guess, separation within the existing dwelling, it does allow for 2 quite comfortably. It can be a risky dwelling, I guess, if it's too filled up. You'd never sort of get 4 or 5 or anything like that into the robust category, just because it would create an interesting environment that maybe wouldn't be befitting to the participants themselves. But we're definitely seeing it for the more purpose-built homes. That 2 seems to be the going scenario.
Just a quick question, Jon. The improved livability category that I know we're not building specifically for that, but do you think there'll be a demand going forward and a niche to build houses specifically for that category?
Yeah, I think the improved livability category is quite a good one. The funny thing is it's a strong category, and as an example, we had a client recently that finished off a home and ended up getting three sort of IL clients, improved livability clients, into that home, even though it was an HBS grade, a high physical grade home. And that's created quite a lovely environment for those clients, and they seem to really enjoy it. So the IL category is a strong one, and I guess the benefit is you can get IL into a high physical grade home or a robust grade home. So it's a good one. It's a good category. And it's a category that needs homes like any other category. First and foremost, why are we doing this? It's not for the investor's return, it's for the participants and their requirements. And if we're helping the 4 grades of NDIS participants categorised by the NDIS, then that's fantastic news for everybody.
I guess the other advantage of the improved livability category is that you are more likely to be able to have 3 tenants in the one house compared to the other categories.
It does open that up more because it's a more flexible category. That's right. So, not to say that you would get 3. We never overpromise. And like I said, we're not the SDA provider ourselves, in fact, anyway. But we have seen that happen in those homes. That's right.
Excellent. Minh, any other questions? Or I think we've covered most of what we wanted to discuss with Jon.
I guess the last thing is, Jon, your business is really a wholesale business with the channel groups and marketing and real estate agencies. It's not like you can take inquiries directly from a mum and dad investor, can you?
No, we don't. We don't work directly with anyone. No, we don't have a sales team per se. I guess our focus is really on the homes themselves with our building partners, and that's our specialty. So we try and work with very specialist organisations that sort of have the same methodology as us, and have clients themselves that we can work directly with from a B2B perspective. It just allows us to really focus on what we're good at, and that's putting together a home with our building partners.
Yes, exactly. That's the reason why we've brought you on board, to help give our listeners a better insight as to the mechanics and the workings of an organisation like yours, because it is very complex. It's very detailed. It's not easy for a mum and dad investor to look at a builder and go, okay, well, this builder looks good. He thinks he can do SDA. I'll just use him. It's so complicated in this environment with regards to the construction industry where it is, the complex nature of the NDIS sector itself. And, the research behind it all, it's really hard for a consumer to know, what should I build, design, where should I buy it, who should rent it. It's just too complex. Too many moving parts. And I guess this is the reason why we ourselves, as specialists, property advisors ourselves, me and Rob and the team here, we have to rely upon an organisation like yours to help us also filter the higher quality builders who we should be working with you guys with, to give a end product which is suitable to the participants.
Yeah, that's right, and that's what we're here for. So, as much as we're more here to make sure that home is put on the ground, we are ultimately responsible for nothing else apart from making sure that home is delivered to the category specified, built to the highest quality possible standards with our partners, and designed by our partners as well. So it's what we specialise in. It's what we're good at. We're using the right people to do the right job. And so far, so good. Every home has been completed to a really high standard and has passed their SDA checks for the category that it was zoned for first go each and every time.
Gotcha. Jon, any final words of advice to anyone listening who is thinking about putting their foot in the water for SDA on what they should be doing and not what the mistakes that you and I and Rob are constantly seeing in the market out there at the moment?
Yeah, absolutely. I guess always, get multiple, feedback, and I think working with organisations like you guys have great advice and great feedback there. I guess remembering my biggest one, and I know this is probably not from an investment perspective, but my biggest one is remembering why we do this. And the reason we do this is because it does support the higher care needs community within Australia, and we do have a higher care needs community that need our help to make sure that they live comfortably and safely within within Melbourne or within South Australia or within Tasmania or anywhere else for that matter. So I guess remember that the benefit of doing this is that you're also helping and contributing to our Australian society in a big way and making a big impact to how people live. And it's sometimes it's missed, which is great to see. So it's not only a home that has a rental return, but it also is a home that really does support the higher care needs community in Australia, and that's something that anybody should be truly proud of in a home that they own.
Well said.
Jon, thank you so much for your time, mate. Appreciate it so much. I know your time's valuable, and our listeners and our team here have definitely gleaned a lot of more understanding as to how efficient and how successful you guys are in the Melbourne market, and we look forward to seeing you more active in the Adelaide and Tasmanian market as well.
Good stuff. Really appreciate the time, guys. Thanks again.
Thanks, Jon. Thanks, Minh.
We hope you enjoyed this episode. Please make sure you are subscribed and following us so you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this podcast with those that could benefit. Until next time, catch you on the next episode.